We're going to go through the stages of a bear market. Bear market, bull market, what are we in? If you pull up CNBC every day, it's 50-50. We don't know where we are. Some days we're going up, some days we're going down, and the days we're going up, we're usually coming back to a bull market. And the days we're going down, we're saying, oh no, it's all over. The banks are going to crash it. The Fed's going to crash it, etc. So if you think about the phases of a market where you go up over a long period of time, and then you come down, and then you kind of rebound a little bit, and everybody's like, yay, and then you start to fall, and that's really the collapse. So over the past, call it 10 years, we have had this incredible run on markets. And of course, it doesn't look like this. I mean, there's you climb, you fall. This is what it looks like. I'm just generalizing by drawing straight lines. Then, and let's say this peak up here was, let's say this was 2021 for the sake of this video. Then you have something that switches in the market, and that, in this instance, was quote-unquote inflation, runaway inflation, and the Fed increasing interest rates from zero after being set there for such a very long time, and we got this trickle-down effect where people got really scared. And this trickle-down effect, if we pull up the S&P, you notice that it wasn't necessarily just this up and then fall. It was, okay, this was the peak, we fell, and yeah, it was getting better. Everything's fine. Nope. And this was, okay, this was the new bottom. This thing is rallying back up, and we're fine. Now we're going to keep going to those previous highs. Well, that didn't work out, and we started making these newer capitulation points. I don't want to say capitulation, but points where you were very range bound. Now, what do you notice about what I just drew? Outside of this, what's been happening lately, you were making these new lows. Each time it was a new low, and you were making these new lows. So you couldn't peak above the previous number. You couldn't peak above the previous number. You couldn't peak above the previous number, and you're doing that right now. We cannot get above that previous high that was created back in October of 2022, and that's kind of the point that we're sitting at, some type of consolidation point. So going back to our graph that we were drawing, you are having where that's kind of where we were in here. You were starting to get those rebounds that were happening. Oh, yay, we're good. No, maybe we're not. Yay, we're good. No, maybe we're not. I think we're probably in this range. Probably not so much on this side, but more so on this side. And that fall hasn't happened yet. Now, what causes falls like that? Well, people typically make up some excuse for it. Like back in 2020. If you remember back in 2020, let's pull up that chart again. This was absolutely wild. People said that this fall right here was from COVID. Sure, that was the catalyst. It was basically shutting down the world. But think about it. What was the reason that this happened? It was because people thought that people were not going to be shopping anymore. They didn't know what was happening because it's really never happened before. People were saying, oh my God, Apple isn't worth that much. Apple pulled back big time. Google pulled back big time. And then Google went crazy because people were advertising and YouTube was going nuts, and when we had that skyrocket in price. But back here, it wasn't COVID that was doing it. COVID was the catalyst. COVID was the thing that pushed us over the bridge, or the straw that broke the camel's back. It was people worried about overvaluation. They were paying too much money up here for companies like Apple, Google, Peloton, and any company you want to name, you name it. Every business was affected because people were paying too much and it was dropping down in value. And people are going to argue that. They're going to say, no, it was this. It was COVID. It was this. It was overvaluation. Guys, if you like this stuff, subscribe to the channel. We do a lot of topical conversations like this. We've been talking about the bank crisis that's going on. We do stock analysis. We do earnings reactions. Subscribe to the channel right now. Guys, just because markets are volatile like this doesn't mean that you need to be scared, okay? This is going to give you some really great opportunities to buy. Think about it. Like, I'm looking at Google right now. Guys, Google has been so far out of the realm of possibility for me to buy for such a long time after this crazy, crazy run up to $151.55. But right now, granted, this was at about $90 last week. My buy price on this is about $85. This is really exciting for me. So there is a lot of doom and gloom out there. It does sound scary. It is scary to see your stocks go down. But when you can buy a great company like Google for $85 a share, that is a really great opportunity for you. When you can go in and find Apple, again, a lot of these stocks have spiked up lately, but Apple was trading at $124 a share. Guys, when Apple gets down to below 120, I am going to be doing a lot of purchasing of Apple. And a lot of other people are too. Without volatility, without bear markets, without this, you don't have the opportunity to buy really great companies like Apple, Google, Microsoft, etc. at prices like 120 and a lot lower than that. Now, at the same point, what's happening right now? Let's look at KRE. This is the regional banks. Look at this fall. Look at this rise and fall that we had over the last 2 years on the regional banks. Is this the catalyst? You know, the last couple of weeks, especially if you've been watching our channel, we've been doing a lot of banking videos. Is the Silicon Valley Bank, the Signature Bank, the First Republic, the Credit Suisse, are those the catalyst of this? They very well could be. And that could be what's generating this quote unquote bear market, bull market, whatever you want to call it. And that could be the thing that sends us down here. Now, is this a scary thing? Well, it looks scary because this to me and to you says that everybody's making money, right? And everybody did make money. There were people that email me that I haven't talked to in years and years and years, but they'll follow me on Instagram or whatever, and they'll be like, yeah, I made this much money in this security, and this much money in this security. You should be doing this. And I'm just like, man. You know, Paul said something one day. We were walking in a parking lot, and when everybody was making money, he said, imagine if everybody was an expert at your job. So if you're an engineer out there or a doctor or a plumber, run the gamut on your job. You're an expert in your job. Imagine if everybody was an expert at your job and can do your job to perfection. Well, I'm sorry. In the investing world, not everybody can do that. There's very, very few. And when you have high school kids or 14-year-old kids or 50-year-old people that have never looked at the market before and are just all of a sudden making money, like Dave Portnoy, for example, Davey Day Trader out there, and he said he's better than Warren Buffett. I think he was being a little bit facetious, but at the same point, it was very easy to make money. Now it's not. So the cream is going to rise to the top, and everybody's going to fall to the bottom that wasn't. We need people to get more scared out there. I saw the other day, this is why I think that we're right here. I think that we're right here and not on this side. I said we're probably on this side. We're not on this side because I saw that ARK Innovation, ARK-K, had the most inflows since April of 2021. That tells me everything I need to know. That tells me that people that are interested in disruption, pre-revenue, no profits, no cash flow, just the company is going to do well because it's a disruptive company. That doesn't work. But those people are still in the market. You're seeing positive inflows in all different areas that you should not be seeing positive inflows. When I start seeing negative inflows out of ARK during market rallies like this, when the market is going up, let's draw that S&P again. You're starting to come down. Remember, here's that S&P where it's making those new lows. When I start seeing negative inflows into ARK during these times, when the market is recovering a little bit, that's when I'm going to know that this is getting close to the end. When people are saying, I cannot make money in stocks. If you want to make money, you need to go to real estate. If you want to make money, you need to go to this security. If you want to make money, you need to go to PE. That's private equity. You need to go to venture capital. You cannot make money in stocks. That's when we are going to know that we are at the bottom down here. And yeah, we're going to start creeping back to the top. It's not going to be a fast creep. This is not normal. This is extended over a very long period of time. And if you look at the historical S&P 500 going back to 1929, it takes a very long time to get to certain levels. So where are we in the bear market? I think we're right here. And I think we do have a ways to go. I don't think we're on this side of it because we need more fear in the market. Could this bank situation be the catalyst for that? Yeah, it could be. We thought that Russia-Ukraine was going to be the catalyst. That happened in February of 2022, and the market was supposed to go way down, and people were talking about that it's going to go to zero and there was going to be a world war. Well, that was 13 months ago. I'm not saying the situation's gotten any better, but the market certainly hasn't gone to zero, and we certainly don't have a nuclear war going on. So all of these little things, don't worry about them. You're going to have a lot of terrorist attacks. You're going to have a lot of financial crises. You're going to have a lot of things. Just stay consistent with your investments. Keep doing your plan. If you invest in an ETF every month, do that every month. Even if they say there's going to be a nuclear war. If you do it every quarter, if the market's, listen, sometimes you're going to be the bug, sometimes you're going to be the windshield. When you go like this is the chart that Paul draws a lot. You're going to be buying sometimes when you're overvalued, you're going to be buying sometimes when you're undervalued. Overvalued, undervalued. And it sucks when you're buying down here. And it's scary when you're buying down here. But you're going to be on this red line that goes right through the middle over 30 or 40 years. And that's exactly what you should do. Stick to your plan. Stick to your family's plan. Remember, you're playing a long game here. Don't get distracted with the day-to-day of Jim Cramer telling you that you need to buy and sell certain securities. Subscribe to the channel. You guys have a great day.